that could affect things by about $100,000 on the mortgage qualifying side, right?
So you could go from $400,000 to $300,000.
Exactly.
3, 2, 1. Hello and welcome to yet another episode of YQL Real Talk. And today I have a special guest on who is Dillan Kelly from Dominion Lending Centers, who is a mortgage broker right here in Lethbridge. And today we're going to be unraveling the top FAQs of what a mortgage broker does and if a mortgage broker could be the right fit for you. Finally, we're going to go over what it might take for you to get pre-approved for your next mortgage.
Yeah, thanks for having me. Pleasure being here. Big fan of the pod. And yeah, you're putting all your loyal followers through the ringer here, putting them through a mortgage episode. I know it's not the most riveting stuff, but I'll do my best to have people at least a little bit interested here.
Yeah, it definitely isn't the most interesting thing. It could be one of the most boring things around, but it's actually like the most important.
Yeah, it's
right?
definitely not the sexy end of purchasing, but
no. And it's like, before you ever start looking at houses, the most important thing to do is get the pre-approval done. So that's why I have you on. Unfortunately, you're not the only mortgage broker I'm going to have on here because that would be biased of me. So I can't do that.
No, that's fair.
Dylan, you live in Lethbridge, correct?
Correct. Yes.
You born and raised here?
Pretty well. Moved here when I was 3 years old. So this is all I know. Lethbridge, Coaldale area. Okay. I've been, back and forth between the two, but currently Lethbridge.
And what keeps you in Lethbridge?
Honestly, all of our family and friends are here, and it's a small, big city, which I like. I go to the Calgarys, the Edmontons, and go to the Flames games or whatever. But just kind of going around,
big town, small city feel.
Exactly. It's not over the top. You can get anywhere in 15 minutes. We have a Costco, which is a big one.
We have a Costco. That's why you're staying. And what about your background in school? How'd you get into mortgages, that whole thing?
Yeah. So I actually started when I was 18. That's the bar to entry is that low in the mortgage industry is,
you just have to be 18.
Just have to be 18. High school diploma, I think. And
oh, really?
I think I had to pass a criminal record check, but you have to go through RICA's mortgage broker course, which I would say is relevant to one semester worth of college. Okay. As far as timing goes. And the reason why I did that is I knew I was interested in finance, business. Life kind of took me outside of Lethbridge. Things didn't work out there. Came back mid, college semester, didn't know what to do. Dad was in the business. He said, hey, try to work under me. So started working under him at 18, got licensed at 19. We're almost 9 years later. And it's been good.
Good. Yeah. It's good to hear. Before I got into the real estate industry, when we bought 2 houses before I became a realtor, my impression was always that for whatever reason, don't ask me why I thought this. It makes no sense looking back now. But I was always under the impression that the best place to get a mortgage was the bank and that mortgage brokers were on commission. So they were going to be pushy. Then they're just going to be like every other sales guy. That was just my impression. And the fact that they're not at a bank in my head kind of made me feel like it was less professional for whatever reason. So can you talk about that a little bit? Obviously, I will say now that I'm dead wrong and it's not the case. And it's, in my opinion, it's probably can be a better way to go depending on your circumstances. So can you just give me some background on what a mortgage broker is versus the bank?
Yeah.
Versus if you're going to a bank?
Yeah. And what I'll say is everything I kind of say between banks and brokers is going to be more of, general and how it is, on the large scale of things. Because there's really good bankers, there's really good brokers, and there's also really bad bankers and bad brokers.
Right.
So to compare one bank or one broker to one another, it's tough. But generally, brokers have, a wider range of products. If you go to your bank, you're going to only have that bank's products typically. Go to the broker. That broker could work with your actual bank. We work with big banks, the Scotiabanks, TDs, HSBCs. We work with credit unions and lenders you've never heard of. And that offers us to get you a larger product range as far as interest rates, if you want, line of credit, specialty products. And what I'll say with the banks is it's a misconception that we're biased because we're on commission, because a lot of the bankers and mortgage specialists at the banks are actually on a bonus structure or a commission structure. There's positions in the banks that are 100% commission on the mortgage side of things. So, they're pushing their one set of products where, yes, we're only getting paid if you close with us, but we have a much larger range of products to go off of.
what I usually tell clients is if you're already at the bank, like if I say, client, have you talked to the bank or mortgage broker yet? And they said, oh yeah, I've talked to my bank. Okay, that's good. And you got a rate from them. Yep. Okay. Might be a good idea to talk to a mortgage broker as well, just to give you some more options, because that bank has a rate and it might be better than what you can provide them, but it might not be. So it's worth talking to a mortgage broker just to get all the options, because like you said, you can shop more than one bank and more than one product, whereas the bank only has their bank rate and that's it.
Yeah.
Right?
Yeah. And it's really cool. So I'm part of Dominion Lending Centers. So the DLC group of companies actually did more business than any of the major banks. Of course, we're not doing it all at one lender. We're sending it to a bunch of different lenders.
Yep.
But that's kind of the power of the broker. More than 50% of new home buyers in Canada are using mortgage brokers. So it is trending in the direction of people being educated and going to a mortgage broker. Because yes, rate's a huge thing, and typically we do, crush it out of the park as far as rates go. But you have to think of, how long you want to be in the property. Do you want different terms, payout penalty structures? Are you going to want to pay down the mortgage quicker? You're going to have a bunch of different questions that, again, rate is a huge component of it, but you also want to make sure you're being taken care of as far as, other aspects of the products.
Yep. And then how, I guess, because you don't work at the bank, you're in commission. How do you get paid? Is there a fee for me to use you, or are you just straight on commission?
Yeah. So typically there's not a fee to use a broker. The only time there's a fee for a broker is if we have to go to an outside the box lender that doesn't pay us a referral fee. We probably have 30 or 40 different lenders that will pay us a referral fee. And how that works is...
So unless you're going to like a B lender.
Yes.
Or
correct.
C lender, D lender, E lender, whatever.
Yeah. So if we're sending to, a Scotia Bank, an
Which-
ATB credit union, we're going to be getting paid similarly from place to place.
Yeah.
And they look at it as they'd rather do that and pay us to find the business than have to employ people on salaries or train people themselves to find the business, and also, house them in
So it's
branches.
basically a way for the bank to outsource. Right?
Exactly. Exactly.
Is that why it's trending more?
Yes, because
towards-
that's actually a cost saver, because, banks
Absolutely.
don't have to train the people, because in the banking industry, people, jump from place to place so often. There's so much turnover on staffing that anyone that's pretty good at banking is going to get poached by another bank. Typically, again, there's great bankers in Lethbridge here, but people bounce around a lot. So it's a lot of effort to, train the right people that are connected rather than just paying a referral fee. And then, you don't have that cost overhead. If you're not doing the business, you're not paying somebody.
Yep.
So,
which is why I also offer a referral to free too. So if anybody's listening that has a house to sell, please send it to me and I'll send you money.
there you go.
Just to wrap that up. So you don't get paid by the client typically. It's usually all in commission.
Correct.
So it doesn't cost you any more to use you than it would the bank, unless it's an A lender, B lender, C lender, but the bank wouldn't have those options anyway.
Correct. And there's certain banking relationships we have that they're not able to offer a better rate than the broker channel is. So we're protected that way. So it's not one of those things, or at least it shouldn't be, that you're getting, if we're going to your bank for your mortgage, the bank's not going to undercut us. If we have an application open, they're going to offer us kind of their best rate.
Yep.
Typically.
Okay. Now, I know you don't have a crystal ball, neither do I, but I want to get into some more of a juicy topic, which is interest rates right now.
Yeah.
So medium term, short term, long term, interest rates have held. There was an announcement yesterday, or was it
That's
this
correct.
morning?
Yeah.
So yesterday there was an announcement that interest rates have held for the second time, correct?
Mm-hmm.
Well, what are they staying? Are they coming down? Are they going up?
Yeah.
Let's start some hysteria.
So yeah, my biased opinion, at least I hope it goes down. But when I look at stuff for the economics bit, I lean on kind of our chief economist at Dominion Lending Centers, Dr. Sherry Cooper. And she's been, it's economists are usually wrong a lot of the time, because it is so tough for anybody to predict. And there's world events that happen that change things, COVID, prime example.
Yep.
None of that was, anticipated. But the economists that I follow, and specifically Dr. Sherry Cooper, they are figuring that rates are going to hold throughout the year. In maybe Q4 of this year, we'll see a rate decrease. I know there's some people that are a bit more, aggressive on the prediction, saying by the summer we'll see a rate decrease. My personal opinion, the next change that will happen, and I think we'll hold out for a while, will be a decrease rather than an increase.
Okay.
The United States continues to raise their rates while Canada continues to hold. Our economies are, obviously different.
So, but I've heard that mortgage rates in the States are down, but their rates are still going up. Like, is it their key interest that's going up and their mortgage rates are down?
So it depends. It's just like in Canada, how we have fixed and variable rates.
Right.
So their prime rate has been continuing to go up. The Fed's continued to raise it, where Canada has put a hold on it the last couple times, and kind of the more wait and see approach. We'll see what happens from, the last year of increases. We've seen in the last, year and a bit, 4.25% increase in rates. Huge, right?
Yeah.
So that's having a lagging effect on the economy and everything like that. So
right.
I do believe, in the short term that we're going to see fixed rates potentially drop slightly, but right now we're low 4%, and I don't see us going into the 3% until late, this year, if not all the way till next year.
And why are they going to be? So what's the reasoning? All of a sudden, like obviously over the last year, we know that they blew up interest rates, like you said, to 4% to try to curb inflation.
Yeah.
Inflation's slowing down. Is that why it's holding?
Inflation's still high, just not as high as it was.
Right.
The Bank of Canada, with their yesterday's announcement, they make it sound like it's, going to be all good, sunshine, rainbows. We're going to get to about 3% inflation by the end of the year, and then we're going to hit the target 2% by next year. That's all, great, but I worry that's going to take a little bit longer. Right. So I don't see rates dropping until at least Q4. As far as variable goes, fixed rates are based off something completely different. Yes, it trends the same way typically, but the bond rate market, so kind of what lenders are looking at as far as the cost of these funds, has slipped a little bit in the past month here. So fixed rates have actually dropped where variables have held. So there's actually about 1.5% difference between the best variable rate and the best fixed rate right now, which is a huge gap, right?
I got a variable rental right now. It's at just over 6%.
Ouch.
It's killing me.
Yeah, exactly. So invariable has historically been fixed, but when people say, should I go fixed or
cheaper than fixed?
Yeah. When people are asking me variable, fixed right now, what do you do? Right now, I'm starting to recommend shorter term fixed rate products. Is the 3-year fixed is kind of getting quite popular in our office. And the reason why that is because it's only slightly higher than the 5-year fixed. And the way things are trending and how things are projected to be the next few years, in 3 years' time, the rate should be quite a bit lower than what the 5-year rate is.
Okay.
But again, no crystal ball.
No, of course not.
Super tough to predict anything. I don't want to say that rates are going to drop, all this stuff. It's impossible to time the market, this with values of prices.
Absolutely. So here's the thing is yes, it's good news that interest rates are going to drop. So then I hear a lot of people saying, well, I'm just going to wait until interest rates drop because then it'll be cheaper for me to buy a house. Well, will it? Because interest rates drop again, the housing market's going to heat back up. Prices are going to go up because there's going to be more buyers out there. Yeah. So your interest rate might come down, but you're going to be paying potentially paying exponentially more for your house because of that interest rate drop. So to me, there's no point timing the market. If we could all time the market, we'd all be millionaires, but
it'd be amazing. People that say that prices are going to tank or anything like that, and they could, again, no crystal ball, but you just look at the projected new housing numbers in Canada versus the new immigrants that are coming to Canada. People are going to have to, be housed somewhere. Over
supply and demand.
Yeah. From year to year in Canada as a whole, rents have increased by 18.7% when there's no rent control. So meaning,
even more in Lethbridge, I think, over the last year.
Probably. Yeah. That's around Canada is 18% when somebody's, getting rid of one tenant and finding a new one the next year. That's a huge increase in rent from year to year.
Yeah.
And, I think, values in Lethbridge, it's tough to say what's going to happen in the next, 24 months. But historically in Lethbridge, it's, slowly but surely you've gained value. Obviously over COVID, there was a big spike in values.
Well, I think if we would have saw a decrease in home values, we would have seen it already over the last couple months.
Oh yeah, because
couple
Toronto and
years.
Vancouver is getting hammered, right?
Yeah, and we have not seen that. Like, housing prices have held, if not increased a little bit. And I think if there was a bottom of the market, it's either here or it was a couple months ago.
This is a little bit off topic, but personally, and again, this is just from what I'm seeing in Lethbridge, anything under 350,000, I've been seeing competing offers, over ask offers.
Yep.
And it's like we're almost in the prime point of, that COVID market that was so hot. And I know the prices might not be exactly there right now. But the activity, because there's such a demand for housing versus the supply of inventory in Lethbridge, I find at least.
And I think right now, if there was people out there that are saying, I'm waiting for the bottom of the market, they're like, well, if interest rates drop, this might be drop again in the next couple months. This might be the bottom of the market. So the people that were on the sidelines waiting are now looking to enter. And now that rates have held, everybody that said, well, I'm going to wait until rates quit going up, at least they've stopped going up now. So they're starting to enter the market too. And I think it just, because there's been now 2 rate holds in a row, I think that provides just some stability and some assurance that rates are going to be okay. And we're not going to see 10%. If they buy a house now, when they renew, it's going to be at 10%. Yeah. Right. I think that's a big factor, just as much as the price, is just the assurance that it's going to stay where it's at.
Well, and the thing is, it's weird because labor demands from year to year are almost at an all-time high. Wage increases from year to year is near an all-time high. So people are making money. They're spending like crazy. Canada debt's at an all-time high as well, right? But people are super emotional when they're...
What kind of debt though?
Consumer debt.
Consumer debt, yes, not housing?
Both.
Oh, that's included in there? Okay.
Yeah. Oh yeah. Yeah. Just all sorts of debt. Okay. But, purchasing for a lot of people, it's super emotional, and people get so caught up on the rates, the prices, everything like that. They have to look and say, am I going to stay at this house? If you're staying at it long term, at least in Lethbridge, it's proven to be, a good choice compared to renting. And then as far as the rates and everything like that go, yes, rates are likely going to go down over time. But if we wait too long, our price all of a sudden going to, shoot up again.
Exactly.
So are you able to afford the payment today? Are you comfortable with the payment? Are you happy with the house? Do you see yourself in the house, longer term? If you do, then it's probably a good time for you to buy. If you're not sure if you're wanting to stay in the house, you might have to sell in, a year. Maybe just wait and see what happens. But if you're going to make a long-term decision based off, the short-term market, it's tough to time. It really is.
Yep. And it's like there's the old adage, you don't wait to buy real estate, you buy real estate and wait. Yeah. Right? Like it goes, it speaks volumes when you're talking about especially interest rates too. Yeah. So when it comes to pre-approval, let's jump back here because we've talked a little bit about what's happening in the future. But now talking more about specific mortgage broker things. When it comes to pre-approval, what are some of the questions and what are some of the documents that you need, just quickly? I know it's all very personal and stuff. So as much as short form as you can, what is somebody going to need? Well,
first thing is just jump on a call with, a mortgage broker like myself or, somebody else, and just say what you're wanting to do. What is your goal? Is it to buy that rental property? Is it to buy a vacation home? Is it to buy your first home? From there, then we'll know the questions to ask. Are you employed, self-employed? We're going to want to see job letters, pay stubs, maybe some tax information. We're going to want to know, where the money for the down payment's coming from. We have to source that money. It's very much dependent on everyone's situation. But the best thing to do if you're not sure, how to get pre-approved or you don't even know the process, just call an expert. And even if you're not buying this year, just say, hey, I want to get my ducks in a row. I'm thinking about maybe making this job change or switching to self-employed or buying this business or, buying a vehicle.
Getting in touch with you early, like even if you're a year out or whatever. Like I know there's lots of insight a mortgage broker can provide some to make sure that if you want to buy next year, you can do X, Y, Z to make sure that you're ready. So that leads into the next question is, what are the biggest mistakes that you see clients make when it comes to affordability or getting pre-approved? Yeah.
I'll go back to the auto loans because, people have student loans, but to me, that's a good, as long as you're using your education and everything like that. Student loans are fine. I'm not going to tell people not get student loans and not go to school. But auto loans, those, if you're going to hold off on anything in your life before buying a house, I would say don't get the nice car. I know it's super nice, shiny today, but it's going to affect things like crazy because we look at not the balance. We look at it in a very weird way for these, auto loans. We don't look at the balances. We look at the actual payments. And then now that will, affect the affordability and the qualifying.
So if you're like, I'm just going to go get, a base level Kia for under 30,000, just under 30,000, shouldn't affect anything, should it?
Yeah. It definitely will. It definitely will. So let's say you get that car, and this is a reasonable car, but I want to pay it down somewhat quick. So I want to have a $700 monthly payment. I can afford that. I'm affording rent, everything like that. Now all of a sudden that could affect things by about $100,000 on the mortgage qualifying side, right?
So you could go from $400,000 to $300,000.
Exactly.
Or 3 to 2, or 2 to 1, just because you bought a car.
Exactly.
A lot of people, I shouldn't say bought a car. I said financed a car.
Yeah. And most people need a vehicle. And if that's your situation, you need to, lease or finance one. We can work through that with you, but, have that conversation with a professional.
Before you go,
here's my goals. And, even if you want to buy in 2 years, how's this vehicle loan going to affect me? Because even though your balance is paid down in 2 years, your payment's going to be the same, right?
But I've heard of clients, they go and get their pre-approval. We start looking at a house, it takes a month or two waiting to see what's on the market. Okay, we found the house we really like. And then we go to submit everything and you're like, where did this car come from that you just bought? You didn't tell me about this when we pre-approved. Oh yeah, I just got it last week. I just got a raise. And it's like the house, your dream house that we just took a month finding is now in jeopardy because you got a car. So get the house first, then a car.
Yes, absolutely. Every time. Car loans are a lot easier to get. And, not saying that you should get a car loan right after buying a house, but if you're wanting to get that, again, fancy car, vehicle, whatever, do it after the house because you're going to qualify for it. Where, the flip side, you might not qualify for the house if you get the car first.
Yeah. I've always been the biggest advocate for buying a used car. Some people hate me for saying it.
I got a 2010 truck. I had a new car. I had a payment. Really nice, fun to drive. But after that year, you say, well, this is pointless. At least I said, well, this is pointless. I'm paying all this money.
Yep.
And, it just drive me point A to point B.
Yep. And so, I know there's like other things you got to look out for, like maintenance and whatever else. But really, like a brand new car, again, $700 for like a baseline Kia a month. That's $7,000 a year. My car cost me, I think I paid like 14 for it. So in 2 years, if I were making those payments to be paid off, that's $700 a month. Take like 3 months of that is $21,000 that I would have for maintenance if I ever had to do something that expensive to the car, right? So I don't know.
I'd rather have a nice house than a nice car, but the people are completely opposite. Some people love their vehicles and they'll swear by them, but and
if you want to make a good investment, buy the house first.
Yeah.
Like it's pretty cut and dry. Like, and I'm very
unless you're buying like a 1965 Ford Mustang or whatever it is. If you're buying something off the lot, you're not going to see that money back.
No, it actually kind of drives me nuts a little bit. You got to buy a house first.
Yeah, there you go.
From the time somebody talks to you and gets all their documents to you, that's usually a kind of a hang up. So by the time everybody gets their documents to you, how long does it typically take to get pre-approved? Like in the best case scenario.
Yeah. So for us to run the numbers, best case scenario, it'd be same day. It's really, really quick. If somebody's had, like you said, ducks in a row, we know what's going on. We've done enough mortgages. We've worked with the lenders enough to know kind of what will work and what won't work.
So it's really not that involved. Like I always feel like people don't want to talk to a mortgage broker because it's boring, but I'm just like, you have to get it done. So just do it. It won't take very long. Just get all your documents over there. That's the first step. So
it's not like we're meeting 3 times in a week to get you pre-approved. It's a quick call. I'll send you an application form, list of documents. If you send
you guys don't have to meet in person either. It can all be online.
No. So about 95% of my clients, I don't meet in person.
Okay. Yeah. Yep. I would appreciate that if I was looking for another home soon, because if there's one thing I hate, it's going to the bank. It's the most dry, horrible process. There's always stupid lines and they're hiring less people at the bank. So it just takes even longer.
Yeah.
Like I get a couple of American checks every now and again and I got to go deposit them. And there's always a line at the bank because I can't do it online. It drives me nuts.
Yeah. We try to avoid that with technology as long as like the person I'm dealing with is somewhat, tech savvy. There's online portals to get documents, everything like that. So, and it's not just the young people that are doing it now in today's society. When I have somebody that's 60, 70 years old plus, they're able to pull all the documents fairly simple. It's crazy. Everyone's quite versed in the technology today.
Sidetrack here. I was watching a documentary about Estonia of all places. And so in Estonia, you have a number that's like a SIN number. And the SIN number it's not called a SIN number, it's something else, but it's like an encrypted number and anybody can know your number. So you'd be like, oh yeah, my SIN number is 1234567 and it doesn't matter because nobody can hack it because it's so encrypted. And on that number is literally everything. Your taxes are on your number. Your Alberta healthcare is on your number. I don't know, what else do you need for taxes? Your employment, everything is connected to your number. So when you go to do your taxes, it shouldn't take you 4 hours, 5 hours, 2-3 days like it does here. It takes like 15 minutes. When you get your pre-approval, literally I would give you that number.
Yeah.
And you'd be like, oh,
as
I have
long as
everything.
The security is good. Yeah. Yeah. On our application form, people don't opt for it, but you can log right in. Like when you're filling out your assets, it'll give you the option to log into your bank accounts on our application form with certain banks that are set up with it. And through an encrypted system, we'll get your bank statements directly from the application. So you don't even have to print off anything.
That's still not the same as Estonia, but no, it's pretty good.
It's getting there slowly but surely. We'll get there.
Yeah. Cool. I just thought it was super interesting that this like little weird country that really doesn't come to mind often is it's like so much more advanced than like the archaic things that we're doing.
I'm all
here.
for it if the security's there. If you're going to lose your wallet and get your whole life stolen, that's a different story. But if it's
that's why it's like, if you think about it, it's smarter than what we're doing because people carry on their SIN number on a card.
Yeah.
It's printed on a card.
Supposed to shred that.
Like, what the heck? Are you supposed to?
I think so.
Oh, I'm pretty sure I have the card somewhere. Like, what else do you do? How else do you have your SIN number?
I don't know. That's a great question.
What else are you going to do with it? I don't know. I think it's stupid. One more quick question to kind of wrap things up. Maybe it won't be quick, but mortgage hacks. So is there any way, like what are some ways that you can either save on interest or pay off your mortgage sooner that you know of that could help somebody out? Like let's say they have a 25, 30 year mortgage and they want to pay it down in a quarter of the time or save some money or anything like that. Like do you have any good hacks?
Yeah. So the quick and most common one is biweekly accelerated payments on a mortgage. You are paying extra every year on your mortgage as far as like the amount you pay, but it's also paying down the principal. You have most of the products out on the industry now, you have lump sum payment options where you can pay down 10, 15, 20% per year against it. What I will say I talk to a lot of people and it's amazing being mortgage free and paying down your mortgage quick.
That's another question. Should you even pay down your mortgage quick?
Yeah. This is where this is leading. So people are so concerned about paying down the mortgage. They want to be mortgage free. And it's great being mortgage free. That's a goal of mine, obviously goal of everybody's. They don't want any debt. But when people are prioritizing their mortgage at a lower interest rate than, a credit card, line of credit, auto loan, that's where the math doesn't jive for me. And I think, people are so worried about their mortgage payment, of course, pay it on time, but the extra payment portion, only do that if
all your other debts are gone first.
Yeah. If, right now people that locked in a couple of years ago, at 2% interest, why would you be in a rush to pay that down if you're making money elsewhere?
Yeah.
Right.
It's a really hard thing for lots of people to get their head around because it's not taught anywhere.
Yeah.
And it's a kind of unique way of looking at it. Whereas like, let's say it's like you're saying, you have this big debt. It's costing you only 2% a year when you could be shoveling like 20, 30 grand onto your mortgage every year to pay it off, let's say. Or you could be taking that 20, 30 grand and buying an investment that's making you 7%. So if you take that 7 minus the 2% it's costing you to pay your mortgage, you're still up 5%.
Yeah. If you're signing up for a mortgage around 5% today, different story. Let's pay it down. Let's do those biweekly payments, everything like that. Because, 5%, even though you can historically make that on the market or doing different things, it is, that margin between, the interest rate of the mortgage and other things, it's lower. But if you have credit cards, line of credits, prioritize those first and then kind of go from there.
Okay. I had no credit cards, no other debt, just a mortgage. How can I pay it off quicker? Weekly payments?
Weekly accelerated. Yeah. It's going to be about the same as bi-weekly. The lump sum payments are going to be by far your best option. If you have extra money sitting over, you get an inheritance.
And is that going to save you money or is that going to take time off of your mortgage?
Both. So if you're paying down your mortgage principal, with these lump sum payments, you're paying less interest on each payment then.
Right.
So, your monthly payment's going to stay the same, or biweekly payment's going to stay the same if you pay down,
but you're just going to crush your mortgage.
Exactly. It's going to teeter-totter far more to the principal side than the interest side.
Do you know, you probably don't know, you probably need a specific example. Like if I had a $400,000 mortgage, 20% down, and I switched to like bi-weekly payments or weekly payments, do you know how much time that would save me, or how much? You probably can't.
Roughly 2.5 years.
Okay.
Yeah.
You pay for.
If you take a 25-year amortization, you're going to have it paid off in about 22.5 years if you're doing bi-weekly accelerated payments.
Yeah, it sounds great, but it's not.
But then you also have 22.5 or 22 years of an extra monthly payment worth of payments per year. So it's not this crazy thing. And then, for rental properties, completely different story. If you're wanting just cash flow and hold on to rental properties for 25, 30 years, you can take the 30-year amortization, have the smallest payment possible. If you're happy with what you're cash flowing, paying a bit down against principal, the appreciation of your assets going up slowly but surely, to me, that's a good strategy. For a main residence, maybe a 30-year amortization is not the best for everybody.
Okay, specific example then when it comes to revenue properties.
Yes.
This maybe you should save this for another podcast, but quick question. I have a rental property. We've had it for like 7-8 years now.
Yeah.
The next time the mortgage comes up, do we just renew the mortgage and keep? I've always thought about this, like to lower my monthly payment, get more cash flow. Yeah. Is it smarter to pull equity out of it, buy another investment? Or is it smarter to like basically remortgage and push it out another 30 years, but like significantly crush my monthly payment each month to get more cash flow?
Yeah. Yeah. So, and it depends on your risk tolerance and how much you want to be leveraged. For somebody that just wants, fairly young, knows they want to hold rental properties for a while, you can refinance up to 80% of your property's value, stretch it out over 30 years, having the smallest payment possible for that amount, then take that money, buy, one or two other rental properties, depending on what you're looking at doing. That might be appealing to some people, where if you're at the later stage of your life and you want to sell it in 5-6 years, I'd just say renew and try to pay down the mortgage quicker.
Yeah.
But yeah, it's so dependent for your situation. If you're young and you're wanting to build a portfolio, then yeah, you could stretch out the payment. And it's not a bad thing to have a small 30-year amortization payment. And if you don't end up buying something or life changes and you want to pay it down quicker, you have those lump sum payment options that you can pay it down really quick again, right?
Yep.
But it's nice having that small payment. Again, going back to COVID, that's kind of changed my mindset on a lot of things, because people, at the start of COVID, people stopped paying rent. People were worried about payments, losing jobs, everything like that.
Yep.
Having the smallest payment possible is such a luxury for like moments like that, where if let's say your payment is $1,200, but you bump it up to $2,000 and you're doing that, but life happens, you can scale it back all of a sudden to that, minimum payment to make life more manageable. Right? Because people want to pay down things so quick, which is understandable, but you don't want to have yourself in a pinch that if, something happens in your life and you lose income for a month or two, and if you don't have any sort of disability insurance or short-term benefit like that, that you're going to be missing payments all of a sudden.
Yeah.
You want to make sure you have that, happy medium of making the payments and having money for life left over, emergency fund.
It's a good way to look at it, because I often do not think about emergency situations.
Everyone should have an emergency fund.
Everyone pedal down all the time. So
some sort of insurance in place for emergencies. Yeah. Definitely something we at Tomato Lending Centers push is something like people shouldn't be over leveraged, over stressed with payments.
For sure.
Yeah.
Well, thank you so much for joining me today, Dylan, for this episode. If you guys have any questions or you want to reach out to Dylan or myself, all of our links will be down in the description below. If you guys like this podcast, I'd appreciate it if you reviewed it at somewhere, wherever you're listening to.
Give it a thumbs up. Yeah.
It is a fairly new podcast. I'll put all Dylan's links down below as well, so you can follow him on social. He does quite a bit on TikTok, actually. He needs to be doing more, but that's a conversation for a different day. He does post some really good insights on TikTok, Instagram, all that kind of stuff. So I'll put his links down below. And if you guys never want to miss another one of these podcasts, then please subscribe. And we'll see you guys on the next one.
Thanks.
Bye.